With physical gold, there's a finite amount. With digital gold, there's an unlimited amount, and it's cheap and it's easy and it's fast to create. And it's really all about perception management. All these global central banks are buying more gold than they ever have historically, but they don't want the public to do that. Well, why are they doing it? Because they know they're destroying the rest of the purchasing power in the currencies, and they want to remain in control and in power. People need to have the physical metals in their possession.
The World Gold Council recently revealed a historic milestone, reporting that central banks have bought a record high of 374.1 tons of gold in a single year. This surge in gold purchases aligns with Russian President Vladimir Putin's call for increased gold acquisitions, advocating for a fiscal fortress strategy, emphasizing high reserves and minimal external debt. Additionally, the People's Bank of China disclosed its 15th consecutive gold acquisition in January, adding 10 tons to its existing gold reserves, which now stand at 2,245 tons. According to Lynette Zang, a noted financial analyst at LynetteZang.com, central banks are discreetly acquiring gold at unprecedented levels while discouraging the public from following suit. Zang suggests this dichotomy exists to maintain control and dominance over the financial system. She advocates that individuals should consider diversifying their investment portfolios by purchasing gold and silver to safeguard their wealth and freedoms. In a noteworthy development, Zimbabwe is taking a bold step to stabilize its economy by introducing a gold-backed currency, diverging from its currently low-value currency, largely sidelined by businesses favoring the US dollar or South African rand. Finance Minister Mthuli Ncube proposed linking the exchange rate to a tangible asset like gold, which could manage liquidity growth and curb exchange rate volatility. However, Zang notes a key issue with Zimbabwe's central bank's digital currency, where individuals cannot convert it into physical gold. Zimbabwe's currency has depreciated by a staggering 87% over the past year due to rampant inflation, underlining the country's economic challenges. Join us as we delve into insights shared by Lynette Zang. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Whenever you see gold trading at these kinds of visible highs, it still doesn't reflect its true value, but it does get more eyes. And so if somebody's been sitting with, gold, it'll bring that back onto the market. But additionally, how easy is it to use gold contracts instead of gold if you are a trader? And that also speaks to the next part of the question is why hasn't it gone up? Because in the physical market, there's a finite amount, but in the paper or the digital market, there's an infinite amount.
Yeah.
And as we know, a rising gold price is an indication of a failing currency. And, if you look at what the global central bankers have been doing, again, they're buying more physical gold than they ever have historically, because I always go back to this currency's life cycle and the fact that the debt-based system really died in 2008. They just had to, we could have a little contest here, right? But they just had to print out, as much paper as they could to make it appear that everything is hunky-dory, push the stock markets to new highs, speculation and all kinds of things to new highs. But that's really the answer. With physical gold, there's a finite amount. With digital gold, there's an unlimited amount, and it's cheap and it's easy and it's fast to create. And it's really all about perception management. All these global central banks are buying more gold than they ever have historically, but they don't want the public to do that. Well, why are they doing it? Because they know they're destroying the rest of the purchasing power in the currencies, and they want to remain in control and in power.
Yeah.
Exactly the same reason why individuals, need to be buying gold and silver so that they can retain their freedoms and their power and their choices. Gold is good money, right? This other stuff, this is just garbage. This is just debt money. And when you're looking at what's happening, here, yes, technically gold continues to go up, hit that top, But again, a rising gold price is an indication of a failing currency. They can create as much digital gold as they want, so they can push it down, but they're losing that steam. And I'm going to see if this works. Can you see the spring?
Yeah, we certainly
Because
can.
once it breaks, then I don't know that worked great. I have to find a better spring. But when it breaks that resistance level at the top, then yes, it shoots in a direction. And in reality, it has a couple of times for a moment broken that top. So to see it go up in the contract, even if it doubled, even if it tripled, even if it quadrupled, it would still not be reflective of its true fundamental value. The place that you find that is in the physical only market. That's where you find that. Now, I'm not sure about, you're going to know this better than me. If there's been a noticeable change in the premiums because of that greater demand, because in the physical markets, that is a true supply and demand market. Where I see it quite easily is in the collectible physical market, because that is less influenced. Actually, it's not influenced at all too much. I mean, some of the lower qualities are, but primarily that is not as influenced by the spot market as, say, just like a raw coin or bullion is. Could we see it double this year? Sure. But would that still be a bargain? Absolutely. That will still be a bargain. And it's going to be interesting to see what is done by November in the spot market. You just have to, I mean, look at what's happening in Zimbabwe, right? They brought out the gold-backed CBDC, but you can't convert it into the physical metal. A year earlier, they brought out the 1 ounce Zimbabwe gold coin for those people that actually could afford it, to protect the last bit of destruction that they're doing in their currency. But the public, the general public, has still lost all confidence in the currency that's plummeted, 87% in the last year. And that's against this stuff, the greenback, that is dealing with inflation. So that's losing value too.
Lynette Zang, known for her contrarian views on precious metals, believes that silver's current price, approximately $22 per ounce, is substantially undervalued. This view stems from the metal's scarcity and indispensability in numerous industrial applications. Zang argues that while silver's spot price may increase in dollar terms, the ultimate goal should not be to amass more dollars, as fiat currency is steadily losing value. The opening price of silver on a particular day stood at $22.75 per ounce, marking a 2.98% increase from the previous day and a 4.92% decrease since the beginning of the year. This volatility underscores the unpredictable nature of silver's price movements. Despite this, Zang remains cautiously optimistic about the future of precious metals. She believes that as awareness about the value proposition of gold and silver grows, their prices could significantly surge. Zhang's bullish outlook on silver comes as the metal managed to maintain critical support at $22 an ounce and is now testing initial resistance at $23.50 an ounce. Additionally, the price of silver has gained 7% from its recent lows. Michelle Schneider, the Director of Trading Education and Research at MarketGauge, shares Zhang's interest in silver and remains neutral on gold. This stance suggests a balanced perspective on precious metals' future trajectories. Let's get back to the interview.
I looked at the spot price of silver shortly before I came in for this interview, and it was in US $22 and change. I mean, that's laughable. That's laughable. You know, the premiums on silver is ridiculous, because where gold is recoverable, silver is not recoverable. So we're using up the limited supply of silver that we have here. So I would agree 100% that the cup formation, that base, that accumulation that it's building is the mother of all. But where I always kind of veer, because if you're thinking of it in terms of dollars, let's say it goes back to 40 to 1, or even goes to 20 to 1, or whatever it might go to. When that does indeed happen, I think there's going to be a greater awareness, and you're not going to want to convert it into this garbage that buys you absolutely nothing. And, you know, that's where I think that a lot of people kind of misunderstand what's really happening in here, because it's not gold or silver going up in terms of this. If you convert it into this, it's not stocks and bonds or anything else that you can only convert into this. And that's the difference between, say, stocks and bonds and, say, gold and silver, right? If what you're holding you can only convert into government money, and the government money, like in Zimbabwe, nobody wants it, they don't trust it. It doesn't matter what happens with the ratios or the spot price or any of that. With gold and silver, since they're money without anybody dictating that they're money, and they are, and there's lots of historic precedents, but again, going back to its usage, what's more important to me is how I'm going to be able to physically use these myself as a tool of barter when we enter that hyperinflationary depression. Because at that point, nobody wants this, they want this. We talk about inflation. So, okay, the CPI data in the US or anywhere else is running hotter. Inflation is stickier. Well, yes, it is. But therefore, the central banks can't lower their interest rates. And so they'll use that as an excuse to push down the visible price, the paper price of gold, right?
Yeah.
When the reality is, I mean, that's just a trading excuse. It doesn't really even make any sense, because when I look at the monetary velocity, so how quickly this stuff changes hands, right? What I'm seeing has me extremely alarmed, because that monetary velocity is spiking in a pervasive way. Look, maybe I'm wrong. Maybe I don't know anything. But the reality is I do believe without a doubt in my mind that the hyperinflation that we've been talking about has already begun. And that, yeah, this inflation will prove stickier. Yeah, like flypaper sticky, you're not getting rid of it, period, end of discussion. And so people need to have the physical metals in their possession, because when that happens, it's like slow, then boom, fast.
Zimbabwe's move to introduce a gold-backed currency is a bold step toward stabilizing its economy. However, issues with the central bank's digital currency not being convertible into physical gold have been highlighted. What impact could this development have on Zimbabwe's economy and its citizens? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.